And ultimately for the business owner clients, again, pre and post exit, I just want to understand for people who aren't clients of Ausperity is the business owner, we are not that person who you are is typically still the biggest asset. You are still your biggest asset, going into the business, working on, increasing revenue, focusing on that EBITDA number and what that will do as you continuously grow revenue to get that large exit dollar, right? But what we do is have groups like Bridgeway Partners, really good CPAs in place, business attorneys as well as estate attorneys as well. What the insurance sides look like. Do you have a buy-sell agreement in place? Do you have life insurance? All those pieces together, we essentially are that quarterback in this transaction, as well as the lifetime client that you're having on that side as well. So, we're doing our side as the financial advisor, but we're really also being that quarterback, working with the different teams. And if you don't have, for example, a CPA attorney in place, who to truly work with, who do you really want to trust in this industry? Again, a lot of this is a trust side. So, what we want to do is complement you as a business owner with the, outside advisors to have essentially that Avengers team, we sometimes say, in place for you to, again, minimize mistakes, do what makes sense for you and what lines with your goals and objectives as well. And that's, again, what this is really saying is crystallizing those goals and objectives. From our side is what this looks like from the tax planning side. Again, you're going through what I've seen in a lot of these times is you got to understand is when you have this exit and that wire hits your account, there's typically a pretty large tax bill that's coming. Uncle Sam is banging on the door for you. So there's times where people spend or essentially owe more in taxes in that singular year than they've potentially paid in taxes their entire life, right? For, the right price point. So again, what that looks like today, what can we take action in April and not wait till next March to say, what could we have already done? Again, we've had a lot of clients talking to us today of now just recently paying their tax bills and saying, I wish I could have, right? So what we want to do is engage early as possible in the process and understand what makes sense from you from the tax perspective, what cash flow planning looks like. When you do sell the business, do you want to buy, for my Jersey Shore people, a shore house? You want to buy the house in Florida? Do you want to give gifts to kids? Are you now, you're at this point where you've always been charitably inclined, but now with this large transaction, how to gift strategically from both a tax perspective as well as what, groups you want to gift to and how to most effectively do it. And again, the continuity side is really the business side of a lot of what we talked on today. Estate planning on, what we can gift today, the estate tax potentially to have on both the federal side as like, New Jersey as well has an inheritance tax as well. And once we understand that full picture together and where you want to go, that's where the investment planning comes into play. And that's where we think Ausperity is a little bit different of a type of advisor, where we're built for operators. The old model was really that portfolio managers were just going to pick individual stocks for you. And that's, at the end of the day, the service that you're getting is someone who's picking individual stocks and acting more reactive than proactive, more product driven versus aligning with what you truly want. That's why Ausperity is an independent firm and built the way that we are, is we want to provide the best advice that makes the most sense for you and have the right people in place. So again, after tax is important. If I get this $10 million check, how much am I truly netting? What can we do to reduce that number in 2026 or 2027, 2028 when this transaction happens? And having the tech on our end is just to make sure we're getting this full picture, right? All of our clients have built out financial plans where they can log into their client portal and see their net worth is today. And then we run a lot of different scenarios on what that will look like on potentially some life-changing money. And that institutional access on that same boat is our clients are for, the ones that are aligned on investing in private equity. All what Mike and Tyler just talked on that early years of getting that juice of that 10x return in that example. Not to say that companies like NVIDIA continuously go up, but to the same degree as there's a lot of growth for that $30 million company to get to $300 million to $3 billion and participate. And we believe in, again, the private market to get our clients access to it. I mean, a great statistic is 87% of private companies doing over $100 million are private today. So how do you get access to that and participate in that as well? So again, what we try to do is be that capital strategist, understanding where you want to be today and where you want to go. And that's where, again, a lot of this becomes in the bucketing approach and understanding for the portfolio management side, right? A lot of these investments now sound great. How do I get more allocation to private equity? Now, if you have short-term, you want to do some renovations on your home, you have some college expenses coming up for the kids or grandkids as well. You want to make sure, you have cash reserves on that same degree. So what we do is build out for our clients. We want to make sure if there's sideline cash needed, that it's available, because in these investments is, for our clients and prospective clients to understand is that there's typically lockup periods, right? Where this is a private investment at the same degree that you can't just sell it the same way as stock is. It's almost, for people to understand, most people in their property and real estate, yes, real estate prices went up a ton, but it's not like you can find that buyer tomorrow and sell your house. There's a little bit longer of transaction that needs to happen so it's not the same way as the traditional stocks and bonds, but that's where we find this still to be very complementary to the portfolio. So one idea to have as well, just to kind of finish this off as well, and then we'll do some Q&A, is what we've been finding a lot for clients is something is called the custom direct indexing. So instead of owning the S&P 500, when we've just had all this talk with Iran, the market recently, having a little bit of a downturn, instead of just absorbing the shocks, blows of the ups and downs, that you are able to own the individual stocks instead of owning the ETF. On the left side, it's saying, essentially instead of it just being stuck in all the group of portfolio together, you are owning the individual stocks. Statistically, 37% of stocks are actually down in any given year. In years with more volatility, those are opportunities to take paper losses, right? Our classic, example is you sell Home Depot, you buy Lowe's, things on that degree. So you're able to take those losses as an idea. This is, again, one of many ideas that we do for clients, but we want to make sure, on that same degree that you're able to be invested and participate in the equity market, but also be able to reduce your taxes. So this, again, is just one of the many strategies that we do for clients, especially in years where liquidity events and large tax bills are a little bit more lumpy than your traditional year. The other piece to this as well is, let's say you're expecting the transaction to happen in 2028, your carry forward losses continue. If you just want to take the maximum $3,000 in losses in 2026, additional losses that you have are going to carry forward indefinitely. So again, this could be an opportunity to continuously take losses over the next couple of years where you're anticipating a liquidity event to happen. Again, this is where having an advisor in place is where we want to be proactive, not reactive in what we do for clients.